production funding for Behind the Headlines is made possible in part by the WKNO Production Fund, the WKNO Endowment Fund, and by viewers like you. Thank you.
The growth and impact of the real estate market tonight on Behind the Headlines. I'm Eric Barnes, publisher of the Memphis Daily News. Thanks for joining us. I'm joined tonight by Steve Lockwood from the Fraser Community Development Corporation. Thanks for being here again.
Thank you.
Wendy Greenlaw is with Chandler Reports, the Real Estate Information Service. Thanks for being here.
Thank you.
And Gary Thompson is with Boyle Investment Company. Thanks for being here.
Thanks for having me.
So I'll start with you, Wendy, in terms of an overview of the market. And,
Sure.
and I should say, Chandler Reports is a division of the Daily News, but you're here because Chandler tracks in great detail all the home sales, the building, foreclosures, and so on. So let's talk about 2016 and just the high points for you in terms of what was good, maybe, and what was bad.
Sure. So there are a lot of dynamics that occurred last year. As everyone knows, we had setting average record sales prices. So home sales are skyrocketing for several reasons. There's an extremely low inventory right now of homes on the market for sale. We have bank sales and foreclosures at historic lows, which is bumping up the sales prices as well. New home sales activity started to pick up across the county. We had more new home starts than we've had since the start of the recession back in 2007. Average new home sales prices are skyrocketing to over $300,000. So overall, it's an interesting year. There's a lot of dynamics. The prices are going up, but that inventory is still extremely low, and we're seeing these trends continue even into this year.
And when we talk about inventory, that's the number of sales that are out there, the number of homes are out there to be sold that are available. And that again, there just aren't that many is the whole point of the low inventory.
Right, and a lot of people might say that's because, during the height of our market, 2004, 5, 6, we had all these new home sales in the market. There were thousands of them, and now we have a very limited supply of those, so the options aren't out there for the homeowners or home buyers that are seeking.
Okay, and we'll dig into all various parts of that, but just as an overview, that kind of sets the stage. And Gary Thompson from Boyle, you've been at Boyle for 20-something years, right? We talked a little bit before the show.
Mm-hmm.
Doing real estate development. I mean, so you've seen the highest of the highs and the lowest of the lows. I mean, the Great Recession and the 08, 09 period.
Right.
Your take on this year, the last couple of years, and where we're going now in the Memphis area?
Well, I think it's very encouraging. You're right. I started in the residential development aspect of my time at Boyle in 2002. So just as we were coming out of the recession, going into what everybody refers to as the bubble. And pretty much anything you developed, you could sell. Anywhere, any price. It was sort of ridiculous. We all knew it was ridiculous, but we certainly didn't see it bursting and staying burst for almost a decade. So what we're seeing now is encouraging, but we still are a third of normal pre-bubble housing starts. And so that is creating an environment where it's difficult still because builders can't find lots if they can. And everybody's rushing. We've had a lot of dynamics in the market in terms of the schools and how the public schools have changed. Families are families, and they're still looking for a safe place to live with good schools where they can educate and take care of their kids and their families. And so with the school changes, that's sort of pushed everybody into certain arenas where they're developing. So there may be areas that you can develop, or there are lots, but they're not in those school districts. So there's a lot of dynamics that are still going on in the market.
And we'll come back to a bunch of that, but I want to get, Steve, your take. Fraser was a hard-hit community. Like a lot of working class communities around the country during the recession. How has Fraser rebounded or not rebounded from the Great Recession?
The last couple of years really have represented, and you all know this, you do the stats, it really has been an investor feast. Yeah. Wendy and I have been looking at these numbers, and we think that probably 90% of the sales in the last several years have been to investors.
In Fraser.
In Fraser. And neighborhoods like Fraser. And some of those, by the way, are good investors and some are predatory investors. There's both kinds. And
an investor, just to talk about what that means, because it's a really important dynamic countywide, not just in Fraser, but
sure.
An investor could be anything from a big Wall Street hedge fund to a mom and pop who lives in Memphis who has a second home that they rent out. Single family home, maybe a duplex.
Yeah.
that is rented and owned by someone else?
So I would say the most interesting and big dynamic is folks who come in and buy a house these days for 20, fix it up sometimes well, sometimes poorly, sell it to a person in California for 64, keep the rental management, and sometimes that helps a street and a neighborhood, and sometimes it's destructive. But the most recent dynamic is that, you know, the reason why this was happening is that the banks were not able or not willing to lend within the $30,000 to $50,000 range. And this is in a neighborhood where the average price is now up to 33 sales price.
Yeah.
Okay. Now, and by the way, that's an improvement from 09. But so what we're finding though in the last year is the banks have really changed their tune and are totally willing and actually scrambling to make these loans. So we think there's a real opportunity for the owner-occupant market to come back in, and thus our campaign to push that, not because it's just something that we want, but this is the time when that can happen.
Right. And owner-occupied, really just, again, we throw around these real estate terms, but just people who they buy their house, they live in their house, they're paying a 30-year mortgage over time. And that is what really dried up in Fraser neighborhoods.
Totally dried up. And if you come in and buy a $40,000 house in Fraser, which you can buy a pretty nice house for that, your mortgage is, you know, $340 a month, you know, and it's just ridiculously
much
affordable.
less than what you would probably pay in rent.
Our slogan is don't rent for $700, buy for $480.
Yeah, right.
Yeah.
And Wendy, this investor, although it's very heavy in Fraser and neighborhoods like that, and that's a national phenomenon. When the hedge funds got in, and I mean, there are hedge funds that own thousands of homes in Memphis. I think most people don't know that. But also, and Steve just talked about the California couple who buys a house in Memphis, and it's not just in Fraser. It can be in Bartlett. It can be
Arlington. It's everywhere.
And don't you think most people are would be shocked that this is going on at the scale it's going on?
Yes, absolutely. To say that 31% of all of the homes in Memphis, Shelby County are investor owned, and these investors are everywhere from Australia, Korea, Israel, California, New York. People have no idea this is going on within their neighborhoods. But some of them do, because you have people that aren't properly managing them, and they can drive down the street and say, these must be rental units. But in a lot of areas...
managed rental units.
Correct.
Yeah.
Correct. And even ones that are properly managed, sometimes the people that are residing there don't take as good a care as a homeowner would in investing in their community. But yeah, it's happening everywhere. It's pretty rampant.
And so that was, I think the number was 25% of the sales last year were to non-owner occupied.
Yes.
And that includes, again, Bartlett and Cordova and Collierville and high-end homes, which was not something I think we saw Germantown.
Right.
So in your time in real estate, I mean, that's a new phenomenon, this rise of these investors, right?
It really is. I mean, in past recessions, what we would see is builders that could not sell their houses would rent them. And then you would have recovery, prices would come back, and then they'd sell them. And what we've seen in this extended downturn is that we've become a target for the world, because we do have people that can get in those, but they really can't afford a permanent mortgage, or they don't qualify because their credit's not good. So it's become, my friends in the multifamily market call it shadow rental inventory. Yeah. And so they're not competing necessarily against big apartment complex competitors that they're used to. They're really competing with a hedge fund or an investor from California. And so it's everywhere.
Yeah, yeah. I remember when, I think you were on the show, we were talking about this earlier, 3-4 years ago, and this was, you were beginning to see this in Fraser. And there is this kind of, there's a notion among a lot of people that rental homes drive down property values. They hurt markets. They're not tended to. I remember you saying, you know, cross my fingers, maybe it was at some event where we were at, that they're doing a really good job. They're actually building up these homes. They're improving these homes. Again, this was 4 or 5 years ago. Is that still your take, that these are actually positive investments in the Fraser community?
It can be. Okay. I mean, I could show you a couple of houses on Fraser Boulevard that were simply abandoned for 10 years, and one of the investors who I happen to respect picked them up, totally fixed them and put families in there. We don't have the capacity to fix all of the empty houses in Fraser as a result of the foreclosure, epidemic. On the other hand, neighborhoods go through phases. So now's the time for the next phase. And that next phase is to help working families get into those houses affordably. You may know this. Few would know that sale prices have gone up 35% in the last year in Fraser. So there's a steep escalation going on for the last 5 months running. That's not common knowledge yet. And it's really not common knowledge that now that lenders will lend in this neighborhood. So this is the time. Another one of our slogans is, if you make $10 an hour, you can buy a house in Fraser.
Right. What is the lending market like? So, because the perception, and I mean, you hear this, I think, a lot too, from realtors and people in the real estate community, is it's impossible to get a loan. that post-crisis, you know, the standards and the paperwork and the credit score, all that, it's impossible, impossible. That's not the case?
It's easing. In fact, one of the things that we're doing is providing people with information about the banks that we think are friendly to the low-cost neighborhoods, and they're loaning at 580 credit scores instead of 640, and et cetera. They're waiving the mortgage insurance and you know, just programs that and are a little bit more flexible for low income. Credit is still an issue.
Right.
Make no mistake about it. Credit is still an issue, but it is easing, and the banks really, I think, thanks in part to the regulators, are much more avid to loan in the marginal neighborhoods than they were a year ago. Things have really changed. Realtors don't even necessarily know that yet, but it has changed.
Your take on the lending environment and what the realtors say to you in terms of a couple of things. I mean, the standards. I mean, that we'd hear that all the time.
Right.
That the standards are too high. We can't get a loan. Now interest rates are also going up.
Right.
I mean, you've got still got much higher standards than, you know, pre-2009. Some people would say thankfully, but what do the realtors say to you?
I think for areas like Fraser that have lower income, they still tell me there's no one lending there.
Right.
You know, and then I'll mention that to Steve, and he'll say, well, there are. I have 5 lenders right here that are lending to people here.
And then move to Midtown, Collierville. I mean, is that an impediment, or now is just the realtors saying no? We just, as soon as we can get.
I don't hear that complaint in other areas that have high sales volumes and prices.
We talk about a range. I mean, from Fraser to Collierville to Midtown, and the kind of breakdown of home sale prices by. Most of the home sales were what? $100,000 average or something like that. 40% of them were 100,000.
42% were under 100,000, and during the recession, it was 55% were those lower valued homes where the properties foreclosed and the bank sold them off at the lower prices. But on average, I think we were up to almost $160,000 across the county last year for home sales prices.
Right. So again, we talked a little bit about building. We talked about the unavailability of lots, and we'll look at a graphic that shows, you know, the lot prices and the volume of homes, and you see on, you know, the blue bar there is the number of lot sales, which, you know, back in 2006, as you kind of referenced, was through the roof, and then it came down, you know, and now it's a much smaller number. But that red line shows the price of those lots are just skyrocketing. What is, you talked about it a little bit, but let's dig down on that. What is driving that incredible spike in cost? And it's not just a Memphis phenomenon; it's a national phenomenon that people have been talking about for years.
Right. Well, I mean, the development model is really pretty simple. You only have certain things. You have your processing through the municipality to get your entitlements. You have your land cost. You have your development cost, and then a profit potential. And so, really, development costs have all continued to go up, even though we've not seen any rise in incomes or sales prices until recently. The costs have continued to escalate.
What cost is it? Regulatory costs or the?
All of them. I mean, so anything that involves oil has been up. So
Okay.
shingles, lumber has started to go
supplies
off.
and stuff.
You know,
Okay.
so many people in the downturn stopped producing stuff, bricks. So as demand has come back up, they don't have the employees and the labor force to produce them.
Did you? I think you and I were talking about that.
Right.
That there is this whole kind of a big group of carpenters, bricklayers, plumbers that just went away in the Great Recession, and it's not like they were sitting on the sidelines and now they're coming back in. That the economy is better.
Well, I think because of the length of the Depression, we've lost. I mean, home builders, for example, the Home Builders Association has lost half its membership. And we're not seeing that come back because those people went and got jobs at tire factories or other places that are not as impacted by the downturn.
Right.
And so now that they've sort of been there for 4, 5, 6 years, why come back into something that's so volatile? And so that's what we're seeing. And then with the immigration reform stuff that's in the news now, a good amount of the labor is immigrant labor. And so that's part of the discussion. It's just a very complicated issue.
I mean, is there just literal fear among the immigrant population in terms of what they, or how does that play out just from a kind of cold-hearted, getting work done point of view?
Right. No, I don't see that in my work. It's just a function of getting people back into these markets. I mean, if you've been this high and then down here for such a long period of time, people just didn't capitalize for 5, 6, 7, 8 years of no work. because we didn't slow down in Memphis, we stopped.
Right.
And it, it wasn't the normal boom, recession, it was boom, bust.
In terms of, is that part of what drives people? I don't know who I'll ask the question. I'll start with you, but
Sure.
The rise of multifamily. Sure. Okay, so you see all these in Memphis. It plays out very heavily downtown now. There's a couple dynamics there. One, people wanting to be back in the urban core. They want to be closer to amenities. They want to drive shorter distances. Some of it was the Great Recession, and people couldn't get loans or didn't feel secure enough to get a loan, didn't feel secure enough in their job. But with that lot sales being up, does that just continue to drive multifamily? Are there just more and more apartments going to be built, or is that a phase that will slow down?
I think from my perspective, we'll see that start to ease. Sort of going back to the mortgage issue and the ease, I think there's money available, and I think we're seeing credit standards ease a little bit. The process has changed with the new banking regulations. I think it's more of the overwhelming factor of what was meant to be transparency in the lending process, so we got rid of these predatory lenders, is now an overwhelming avalanche of just paperwork and disclosures that people, quite frankly, just don't understand what all of this is. And it's scary.
It comes out of Dodd-Frank, which people think of and hear about in the news as Wall Street stock, broker reform and bond trader reform and all that. But then it plays out as the Consumer Financial Protection Bureau. We get into all these, but they regulate the realtors and they regulate the mortgage brokers and
the appraisers.
And the appraisers. And so, in a place like Fraser, there was some really predatory stuff that went on. But it went on everywhere. But it was very concentrated in those areas. People have said, this regulation, it was necessary because it had gotten too loose and too Wild West, and a lot of people got hurt, and we saw the impact on the whole economy. Has it gone, did it go too far, do you think? I mean, I'll ask you, Steve.
I don't think it went too far, but I think there are always unintended consequences. Yeah. I had a call this week from a guy who put $50,000 in a house and got a $23,000 appraisal, and he was crying on the phone. I get it, but I think you put these regulations in place. It is harder to restore value when neighborhoods get knocked down than it is to knock them down. But I don't think it went too far. In fact, I mean, really it's about transparency and sort of truth in lending and truth in process, and I think it was right.
Yeah, yeah. Do you hear people on the regulation and on the the real? I mean,
when it first happened, yes, that's all you heard about.
Yeah.
And then now, I really think it's loosened as far as what they can offer.
Right.
And I think everyone's kind of got it down as far as what they need to do to get loans closed. I'm not hearing trouble out in the field when I'm talking to realtors about them getting loans approved. Or appraisal values or anything like that.
And certainly there's a lot of speculation now with the new administration and new Congress that those regulations will, if not be wiped out, they certainly will be interpreted much more loosely. Yeah. A lot of this came out of the foreclosures. Let's talk about foreclosures for a second, Wendy. The people remember the foreclosure crisis. I mean, it was astronomical. I remember us writing about it in the paper when the economy was still good, when houses were being built. But those trends of where the foreclosures were rising and rising. I remember the builders would get so mad at us because we were writing about, why are you writing all the bad news? And I said, well, because these foreclosures are happening. We're just reporting what's happening. Right. And I think we have a chart that shows, I mean, the trends on this were, what was it? 6,000 foreclosures at the peak, 2008 or so. We're down under 2,000, give or take 2,000 last year.
We didn't even hit 2,000 last year.
We didn't even hit 2,000 last year in Shelby County. Your sense of why? I mean, just because the economy is better? Because what?
Well, the economy is better, and then there are major banks that had a moratorium here in Memphis and nationally that couldn't foreclose on properties. So we've seen them, starting to pick up a little, but not back to the volume that they had. You and I have spoken about delinquency rates. They're down. They were up a little bit in the fourth quarter of last year, but overall they're down from where they were during the boom. And I just don't think it's as easy for them. A lot of loans have been modified. Steve works with people getting their loans modified all the time, and I think they're in a better financial position that it's just not happening. Right.
Do you see anyone see that changing though? I mean, we have a new administration. A lot of this stuff is regulated by, as I said, the Consumer Financial Protection Bureau, Freddie and Fannie. I mean, there's a sense that people saying there was too much regulation, so we're going to loosen that. Do we just repeat the same mistakes of the past? Is that what happens?
I don't sense that. I think too many people got hurt in this particular downturn that I think I don't disagree that the pendulum swung, and it needed to because it had gotten so loose that if you could fog a mirror, you could get a mortgage. And people that couldn't get pass the credit test for an apartment were buying houses. Yeah. Something's wrong there. And so I think we've eliminated it. I think it's just the wow factor of all the disclosure now that sort of freaks people out. I simply don't understand what all this paper that's being thrown at me, which is a good thing because it's actually disclosing what you're paying and all these different things, and it's sort of covering everybody's hind parts with the process, but it's just overwhelming to someone that's not. You don't take a mortgage out every day.
Yeah,
it's something you do several times in a lifetime, and it's different every time. So I think that's what's impacting people more, is they're just sort of overwhelmed with the process. And I think as the mortgage lenders, as the real estate agents adapt to these new standards, they'll be able to explain it better where it's not so overwhelming.
Right. Your thought on the foreclosures, I mean, do you see a repeat? Do you see predatory lending starting again? Do you see any kind of loosening? It's just because there's always a cycle. I mean, there's always a cycle in construction, there's a cycle in real estate values, there's a cycle in foreclosures. And so we're at this kind of trough that some people are saying, look, inevitably it's gonna go back up one way or another.
Somebody brought me an adjustable rate mortgage within the last few weeks, and I laughed at them. And of course, I mean, they came back with a fixed rate loan. I don't think foreclosures, I mean, I think there's some advantages now. Among other things, I think it took the banks quite a while to figure out it was in their interest to modify loans rather than to let them go bad.
Yeah.
And because they simply lost their shirts doing that. So my counselors in terms of foreclosure have a much different path working with banks now than they did 6 years ago, and I don't think that's going to change. And of course, we've run the cycle of these adjustable rate mortgages, an awful lot of them. Some of them are still out there, but we've run the cycle and we're not feeding new ones into the system. So I don't think that's going to be the problem.
Well, let's shift a little bit to some of the big ticket, big projects. We were talking before about Crosstown. We've written about a lot. Everybody's written about a lot. We've talked about a lot on the show. How does that impact? When Crosstown's beginning to open bit by bit, and how does that impact neighborhoods? How does that impact development around there? Your thoughts, Gary?
Yeah, sure. I think anytime you have a monumental structure like that that's been sort of a blight because it's been inactive. I was able to tour it yesterday for the very first time. I've been here 30 years. It's the first time I've ever stepped foot in the building. But I was blown away with the synergy and the energy that's there. Right. And so when you have an overwhelming positive in your neighborhood, it tends to lift everything around it. Yeah. And so I with Church Health Center being the main tenant, which is just an overwhelming good for our community and right in this issue that we're all dealing with, healthcare and that whole discussion. I think it's positive, but then you combine that with the Memphis Teacher Residency, Tech 901, all of those other companies that are starting to go in there, combine that with housing. When you put quality people in the neighborhood that want to do well, I think it just lifts everybody.
Right. In Binghamton, I mean, and we've talked about it on the show before, there's a grocery store going in.
So
I think probably can't emphasize enough the importance. So we go from the $200-something million Crosstown, which has this huge, wonderful impact, but that, I don't know, a couple $1 million grocery store could potentially transform that whole area, right?
The real central issue on this is that we were recently declared the most sprawled city in the country. And I think of all of the negative things that we've heard about education, poverty, and et cetera, that might be the most damning. And all of these really impressive efforts, and the Strickland administration is right, there's a lot of new, really interesting building of all manners going on in here, and it's all good, and it begets and brings in others. So the Sears Crosstown will really make that whole neighborhood blossom, I think, all the way up to Fraser.
Yeah.
I think that grocery store will help bring more rooftops, and all of that is good, almost all infill development. I want to go back to the land issue. Gary said that people only want to build where there are credible schools and the crime is okay, and he's right about that. So we have incredible amounts of land, but it's incumbent on us that's why the discussions of the schools are so important to the work that we do. And there's some really good investments going into schools in Fraser these days. I know it takes a while for that to take hold, but that's extremely important because we've got land to develop there, and we want to attract people there, but it's difficult at this juncture. There's no question about it.
Right. Just a couple minutes left. Wendy, do you hear, I mean, we talk about the paper all the time, we talk about the show all the time, the realtors talking about, things like whether it's ServiceMaster going downtown or it's the Pinch District in St. Jude putting $1 gazillion, give or take, into downtown, or the Green Line and Shelby Farms and all that. I mean, do realtors follow that, or is it more the schools and crime?
I think they follow. I hope they follow everything. I mean, schools and crime are important to their clients, obviously, but I think they're in tune with where jobs are coming into, what markets are hot, what's up and coming, and where they want to be focused on as far as sales.
Yeah, and let's talk with just this minute left, and we're going to do a full show on the reappraisal. But I think as of the airing of this show, all of the reappraisal, this is tax reappraisal for Shelby County, which impacts everybody.
Yeah.
All the notices are out.
Yes.
The overall residential is going to be up, give or take what?
Roughly 10%.
Okay, and then commercial values up even more.
Way more,
word.
I've heard. Yeah, 40, 50% and upwards.
Okay, and so that's our first reappraisal, and I always screw this up. That's the first reappraisal in 4 years,
right?
And this is where I need Bill. I love that you're here, but I need Bill to always explain this for me politically. I mean, there's a huge impact that this reappraisal could potentially have, right? I mean, you're nodding your head. This is the first one in 8 years that's going to show really substantial increases. How does that, real quickly here, how does that potentially impact what you all do?
Yeah, so residentially, it obviously impacts people's perception of different areas and that sort of thing, and why they choose an area.
That it's valuable, it's an increasing,
yeah. Right, it's growing. From a business side, which the other half of my company owns, office and commercial properties, it's a huge factor to their net operating income.
Yeah.
So as those go way up, it affects their ability, and then that affects rents to all of the tenants and the profitability of those people in those buildings. All
right. Well, again, we're going to do a full show. David Lenore will hopefully have the assessor on and talk about it, because I think people know their own values, but it's going to have a huge impact on the community. Thank you all for being here. Thank you for joining us. Join us again next week. Good night.